Hi folks, Chuck here. It's been a brutal time for the markets ever since early October. I wanted to get a video out this weekend showing what's going on with US stocks. I only have two charts to show as I want to keep this video short and to the point. The first chart is a daily look at the S&P 500. As mentioned in past videos, the breakdown below this prior breakout level was a huge warning flag. Failed breakouts can lead to big declines. As you can see, that break led to a quick flush on heavy selling. Price found support here, bounced higher, and failed to make a new high, rejected at resistance. From there, sellers stepped in and pushed price lower where it found support exactly where you'd expect it to, down here at the prior support low. Again, exactly as you would expect, price bounced off that support, but this time failed to make it up to the prior high and was immediately pushed down hard to the closeout this week. Where did we close today? At that same level it did twice before. Unfortunately, that's the good news. The bad news is we're in an intermediate term downtrend as confirmed by the facts we have reached oversold on our momentum indicator and have so far failed to capture back the bullish range. The 50-day moving average is pointing solidly down with price below it. Notice how the 50-day began falling immediately after failed breakout in October. The longer-term 200-day moving average is at best flat, but at worst starting to roll over and head south. These things don't happen in uptrends. We are currently trapped in this trading range, but it looks like it wants to go lower. If so, it should find support down here at the prior lows. This is where buyers would be expected to step in. Why? Because they did so both in February and April earlier this year. Doesn't mean they will again, but you would expect to find support there for at least some sort of consolidation and a possible bounce higher. It could also, on a low probability, turn out to be the end of this correction and we continue on to new highs. Because we invest for clients and not trade, we do so by making decisions on a longer-term weekly view rather than daily. Pulling up the same S&P 500 chart on a weekly basis, this is what it looks like. Notice here the failed breakout to new highs and the subsequent fall. If we move our vision down to the bottom pane, you can see the indicators I use for my Sightline buy-sell signal model. A crossover of both double indicators below the 50 midpoint creates a sell signal. There's more to the model than just the crossover, including a confirmation based upon price putting in a lower low. Unfortunately, that is also signaled. This is the first time in more than a decade, since January of 2008 by the way, that my long-term model signaled to exit the stock market. Looking left, you can see the Sightline indicator cross under the 50 level twice during the 2015-2016 consolidation here and here. But both times, the whipsaw price confirmation failed to trigger, which kept the model from triggering a sell signal. While the model signaled, I'm never 100% confident it's correct. I always have doubts. I'm always concerned that if I follow this signal, exit the markets, and soon thereafter it somehow will find a reason to rally and then we get left behind. In this case, that fear is there, but also the fact that on a longer term time frame, we're still in an uptrend. Remember, an uptrend is defined by higher highs and higher lows. As you can see here, as of right now, we have higher highs and higher lows. This high is higher than the prior one. This current low is higher than the prior one. That, my friends, is an uptrend and the reason I'm dreading this decision. You should never sell in an uptrend, only when the trend has reversed, which by definition it has not. But a signal is a signal, and as such, we will be following our model by selling some, if not all, your stock positions next week. If for some reason, someone or something does a diving catch to save the markets from falling further, so be it. But unless that happens, be prepared as you're going to see an increase in account activity and growth of the cash positions in your accounts. That's it for this video. If you have any questions, I'd love to hear from you. Shoot me an email and we can set up a time to chat. Thanks for taking time out of your weekend to view the video.